The crypto people have started calling these things DATs, digital asset treasuries. And I really dislike that. It only makes sense to do this if you're accumulating the best asset in the world, which is Bitcoin. What does it really mean to be a store of value? What is Bitcoin competing for? What is its purpose? What does it do? And, it's the best savings technology ever. It's the best store of value ever. It's got the best properties, most of all because of its finite supply. And I think that's kind of like part of what had been missing is nobody had really sized the market for this abstract concept of like parking value in assets. My estimates based on my math, and then I see them pop up like in macro stuff because they probably got them from Saylor and, not knowing that they originally come from me. Just funny how that chart has taken on a life of its own.
Thank you so much. Hi, Jess. How are you doing? Everything fine on your end?
Yeah, doing great. Good to be on the show.
Absolutely. Yeah, it's been almost a year, and you are almost every month on the show indirectly with your chart that is, I think, very famous within Bitcoin. And yeah, it's been great seeing you again.
It's funny how you make all sorts of slides in your career, and then one ends up going super viral, and that's what you end up being known for. But hey, it's fantastic.
Yeah, there's this content in the content creation niche. There's this saying where you better create every content you create. You better put your heart in there, and you better put your things in there that you really like enjoy doing that, and you really like it. Because if you make something that you don't like, and this specific thing goes viral, everyone expect you to do exactly this. I guess with chart thing, it's the same thing where like, you better create charts that you like, because if you create one that goes viral and you don't like them, people will still ask you about them all the time.
It totally true. People sometimes, I use a rather light color palette. Like I guess I kind of gravitate towards brighter, like more pastel-y colors, which is a little bit of a deviation for a lot of slide makers in the business world. But I think it's more fun, and they pop better, and so that's what I did with that one. And everybody has to just deal with it.
It is. I've never thought about the colors of like. I just laugh because I don't know if there's even another chart out there at this point that like shows like, oh, like what's kind of like all the money. I for the few people that might never heard of you or the chart, I better present it because people might be confused now. This is the chart that you're talking about. Maybe if someone hasn't heard about it at all and hasn't heard about you maybe at all, maybe give them some brief overview of who you are, and especially also what this chart is all about.
Yeah. Okay. So I guess as far as this chart in the background relevant to that, I started my career as a management consultant at Bain and Company, and got my MBA at Stanford, and then fell down the crypto rabbit hole when I was there. With Ethereum and then altcoins, and then eventually found my way to Bitcoin, and realized this is, the most important thing in the world. And because of my background, a common exercise that you do in management consulting is trying to size the market, usually in the context of like you're working for a large company, and they're trying to figure out like, should they start selling products in Mexico? And, then you have to figure out, well, is that a good idea or not? And step one is size the market in Mexico. And then step two is figure out how much of the market that company can win. And then step three is it profitable based on those, those assumptions? And so when I, landed in Bitcoin, I was looking around for like internally, I just felt like there needed to be some sort of sizing the market to put it all into perspective of like, here's how much value Bitcoin is competing with as a store of value asset. And then the second step of like, well, and then here are some assumptions about how much value, how much market share Bitcoin can eat as a sort of store of value competing with these others. And I realized that there wasn't like a unified view anywhere that I could find of here's how much value there is in the world, and here are the asset classes that it sits in. It just didn't exist. So, there were pieces in different places, but there was no singular view, because there is no like precise answer, right? Like, and it's kind of outside of people's way of doing things to estimate something that's inestimable, and but that's what you learn. That's the skill set you learn as a management consultant, of like, how do you triangulate a reasonable assumption, reasonable estimate using some assumptions, so that you can have an informed idea, and that was the genesis for creating that chart. Which then, that chart was really the jumping off point. It was what it was step one for the piece that I put out, essay of like, here's how much Bitcoin could win in terms of being a store of value relative to these other store of value buckets in the world. So step one was, here's how much value there is in the world. Step two is, I think it'll siphon off X% from bonds, X% from real estate, and then total that all up, and I got to $10 million per coin in today's dollars, as kind of my conservative estimate for the Bitcoin's full potential valuation. And Michael Saylor read that piece, DM'd me some very kind words about it, and then a few months later, this was in 2023. A few months later, he started using it in his presentations, and it's been a fixture of all of his presentations ever since. In large part because it not only tees up just how small Bitcoin is in the global asset landscape. Bitcoin's only 0.2% of global asset value at this point in time, and that's very helpful to see. Like, even though it feels like Bitcoin's expensive because it's over $100,000 per coin, it's actually still tiny relative to everything else. But then it also, for Saylor's purposes, and the purposes of all other Bitcoin treasury companies now, it's very helpful as a map to show, here's where all the pools of capital are in the world in TradFi. You're getting TradFi returns in the fiat regime, and Saylor kind of uses that as a map for here are the markets I'm going to go target with a new preferred equity instrument that's that goes, for example, goes to the fixed income market and offers them 10% a year when they're accustomed to getting 4% a year. So it's a helpful map for where is there value in the world that we can unlock and entice into a Bitcoin powered product that we can use those proceeds to go buy Bitcoin with and increase our Bitcoin treasury. So it's been a very helpful chart for Saylor, and I think also the broader Bitcoin community. It's also funny too to see, my numbers show up all over the place now, and almost never cited. But I know that those numbers are my estimates based on my math, and then I see them pop up like in macro stuff, because they probably got them from Saylor, and not knowing that they originally come from me. But yeah, it's just funny how that chart has taken on a life of its own, because there just wasn't any good view. There wasn't any good estimate out there to help provide some sort of grounding or bearings for here's the world of value.
Are there actually, I've never looked, are there actually any competing models that like come to different kind of numbers?
No, there are some, I guess, some people have made like bar charts that have slightly different numbers, but exactly the same buckets that I have. And, it's pretty clear that their starting point was my work. And then they changed a few things just to make it so that they didn't have to cite me. I think that's pretty common. I've seen a handful of those, but in terms of like, in consulting, we called it MISI, mutually exclusive, collectively exhaustive analysis, where they would show the whole world of value. I haven't seen anything that does it in a different approach that's not like based on my approach to it.
Interesting. Yeah, they say it reminded me of school when you like copy, but you kind of have to be careful to copy not exactly so,
Right.
to make it.
There's
to
a lot
make
of
it
that going on, unfortunately.
I can imagine because this chart has like outgrown a lot already.
Yeah.
I have an interesting one.
But people can just use my chart. I have it in white background and dark theme background, and please, everybody has my blessing to use it, so long as there's that little citation at the bottom. That'd be great.
Yeah, people are, how should I say it? It's almost a greedy thing of I don't want to share a stage with someone. Like you don't want to give someone like the compliment of like, oh, you did it. Like, so like, I don't know if it's a greedy thing or like, but I see it a lot on Twitter, where I was like this and that.
Yeah, there's definitely that, sort of people who have carved out a reputation or self-branded as like a thought leader. And then, they tend to be the ones who create their own very, very similar version of this chart. It has also been funny to see in the Bitcoin Treasury company landscape. I can think of a few Bitcoin Treasury companies that, I guess are peers to the one I work for, or you could call them competitors, that have like the same analysis, have done their own versions of my global asset landscape numbers, but they certainly can't cite me because I'm competition in their eyes.
It's being copied, in my opinion, is still like the biggest compliment someone can give you, even though it would always be fine to like be at least cited. And I mean, I understand it with like memes, because some people are like, oh, like this meme is from me, and I'm like, I have like no clue. Like, how would I know that like from who this meme is? Because you have like someone's like claims it's his, and then like does not even know. But with something like that, it's so obvious, like from where it is. Like I think it's like very well known that those numbers come from you. It's like, yeah, like just cite it, like just give some credit.
I appreciate that, and it's sort of in some ways maybe it's emerging as like a if you know kind of thing, right? Where like most people think those numbers are Saylor's because he puts it on his chart and there's a little tiny citation at the bottom. He's doing exactly what I would hope, but most people don't read the fine print to and they assume it's Saylor's, and that's fine. But I guess it's kind of a if you know where it actually comes from, and you've got a little bit of a intellectual deep cut knowledge, I suppose.
Yeah, and I think it was in Prague. This is, I think, the first time I was in Prague, and he was also there. And I didn't even have my podcast back then. I just like started a small Twitter channel, and he was telling about the chart. And it's literally how I came up to you actually, because he said like, I think he's like, there's this guy called Croesus, like he mentioned you by name when he pulled up the chart in Prague, I think, and then I was searching. I think this was the first, I could be confused, but I think it was the first time in Prague where he pulled it up.
Yeah, that's awesome. Yeah, that was his first presentation in years, that he had been presenting on stage, and so that was the first time that he had presented that slide. And he mentioned, the Bitcoin analyst Croesus, but since then you're just not going to say that every time. So it's kind of cool actually to hear that, like, that's how you heard about me, was because Saylor cited that slide on stage, and that's great. I appreciate it. That's awesome.
Yeah, I was, maybe, I have to, also say, like, I'm still am, to a certain extent, a huge Saylor fanboy at that time. And I was like, oh wait, Saylor takes it from him. Like, I should see who's this
I love
guy.
that. Yeah, he's got like 4.5 million followers. I have 1/50th of that.
But yeah, I had a whole different question, but because I feel like sometimes those, and it might be very different with Bitcoin, because those innovative things sometimes have when you look at Amazon or Uber or like companies that originally get like those sizable markets, they look at like Amazon and they're like, oh yeah, they're selling books. Like, okay, like what's the market for that? They did not anticipate that they do AWS, that they sell also vacuum cleaners and like they have their own branding things like like whatever Amazon is now doing also. Even with Uber, they kind of expanded the market because all of a sudden people took a Uber that wouldn't have taken a taxi. So like I, for example, never took a taxi. When Uber came along, I was like, oh, like that I like with the app and everything. Like it got me from like sometimes instead of taking public transport, actually like just taking an Uber. And my point is like some of those innovations actually have an expanding market kind of a thing. With your thing, that's why I like it so much, is like you see all of it and then it's just a debate of like how much possibly can Bitcoin capture? And I saw from 5% to like 95% probably all of the estimations. But I'm curious on how you think about this, and also how Bitcoin in potentially in the future could even like expand further, especially as it's programmable and as it's like you can do things with Bitcoin.
Yeah, that's a really cool topic. I think that's part of what Saylor really liked about that analysis was, it's kind of hard to remember just a few years ago, like there wasn't any like, concrete perspective of like, here's exactly what Bitcoin is, in terms of, what use case it's providing. I feel like 2018 with bullish case for Bitcoin and then the Bitcoin standard coming out, it really helped ground Bitcoin as like a store of value, and that's the real, importance of it is as a store of value. And I was, of course, heavily influenced by that, and that brought me to Bitcoin. But it was still kicking around in my head of like, what's in scope then? Like how much? What does it really mean to be a store of value? And what are you competing against? And so that bit of analysis kind of wrestled with those thoughts of like, okay, what is Bitcoin trying to do? And it starts with the sort of implicit assumption there that like Bitcoin's role will continue to expand until it reaches its maximum extent, and then the question is like, what is that, right? So the whole first half of that piece is really kind of teeing up that what is Bitcoin competing for? What is its purpose? What does it do? And it's the best savings technology ever. It's the best store of value ever. It's got the best properties. When you compare when you line up the properties of Bitcoin as a store of value asset, and then you compare those to the same sort of properties for every other bucket on that global asset landscape chart, Bitcoin is by far the best. Most of all because of its finite supply, and increasing scarcity terminating in absolute scarcity is unmatched, and that's only possible because it's digital. And that's right there you have the crux for why Bitcoin is superior to all the analog assets. It's digital in nature, and that comes with all these advantages, and makes it the ceiling on what it could be is infinitely higher because it was designed with finite supply in mind. And yeah, so it's sort of that piece starts with like, okay, let's assume the maximum extent of what Bitcoin can become, and that's a different sort of bit of analysis than what with Amazon, or for classic examples like Nike, where they start in a market and then there's a whole bunch of other adjacent markets that they can expand into, and then they basically the scope of what's in scope keeps growing for companies like that turn into sort of conglomerates of products. But Bitcoin is different, right? It's like you have to start with the maximum scope in order to understand like the end state at the highest level, right? Like store of value as a use case is so much more abstract and high level than what people typically think about. People are so accustomed to thinking about products and industries and and that level of granularity. But you have to up level your thinking to like, where do people park value? and I think that's kind of like part of what had been missing is nobody had really sized the market for this abstract concept of like parking value in assets, at least that I had seen. And yeah, and then I think that simplifies it, right? Like if you ignore the fact that Bitcoin will expand in terms of how many people it touches and how many things are built on top of it, but forget about what L2s and L3s and other functionality will end up becoming in scope, and instead focus on just store of value, which is I think 95% plus of the value for Bitcoin. Then you're starting with the maximum view, and then you can establish roughly what you think is the ceiling in terms of that, that scope is everything. And I think that's what people had been missing, is that for Bitcoin, absolutely every bit of value in the world is in scope. And I think nobody had really said that, or at least that I had seen.
Yeah, and it's interesting because we have, I think Seyfried said it, where he mentioned the store of value use case of Bitcoin is almost all of it value, where we have maybe 400, 500 trillion, whatever the number is of what store of value totally is, and then is the medium of exchange part of it. It's a small part. It adds a little bit on top, which is a big market at its alone, but compared to the store of value in the Bitcoin market, is it's nothing almost.
Exactly. Yeah, it must come from Saifedean, my thinking on that. But it's people get so caught up in medium of exchange, and and the function of money is to transact in, when it's absolutely not. And I think looking at Austrian economics is really helpful for that, which I was totally missing before Bitcoin. I didn't have any Austrian econ background. But they're absolutely right that the real function of money is to store value and propagate it into the future for future use. That's what everybody is doing with the vast majority of their net worth every single day. And you just don't think about it. So you only think about money as, those bills that you hand over in a transaction, but everybody has monetized every asset in the world because they're using it as a store of value. So that's monetization of equities, of real estate. Everything is used as a savings instrument to propagate value into the future. And you don't think about it every day, but that's what you're doing with most of your money, is you've parked it in a store of value asset. So any given day, what percentage of your net worth are you actually transacting in? Some tiny percentage, and that's the appropriate balance to think about the relative importance of store of value as a use case versus medium of exchange.
Yeah, and I also think Bitcoin already is anyways a medium of exchange. It is a great store of value, and there's this but we need to push it as a medium of exchange, and I'm it will come naturally. And it is already here. I already get paid in Bitcoin, most of it actually, and I already pay a little bit in Bitcoin. I mean, I don't know, 10-20% of my expenses directly already. So I'm it anyways already achieved that. It is already possible to have Bitcoin as a medium of exchange. So yeah, I don't get that debate.
It's kind of funny in hindsight thinking about, the big blocker argument of well, you can't buy a coffee with on-chain settlement. It's okay, all right, fine. Carve out your tiny little use case of small transactions that need to settle immediately rather than within 10 minutes, and you can't afford let's call it $1 transaction fee. How many transactions are there like that? Well, most of your purchases day to day, but that's still, a subset of all the money that you're dealing in, and that's a subset of all of your net worth that the vast majority of it you've parked in store of value assets and it stays there. So the big blockers were through they got put the cart before the horse, right? And they prioritize something that is so secondary in hindsight. It doesn't matter at all compared to the importance of immutable store of value asset.
Yeah, it's decentralization and security that matters. And then like buying a coffee comes second to that. It's very, very obvious for me.
Yeah, knowing that my net worth is safe is kind of infinitely more important than my ability to buy a coffee.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need.
Very true. I want to dive into, because you gave kind of like a 2025 update to this chart. I want to pull it up again. And it's interesting because you said global assets. So the 2023 chart was, I think, 900 trillion.
Yep. And that's a number you see all over the place in Twitter and other macro econ now. That 900 trillion number is all over the place and is never cited too.
Yeah, and soon it will be 1,000 trillion.
Right.
But yeah, like the 900 trillion is like, you will be probably seeing it still along. I probably like till like middle of 2026, because people use just like the one chart they found at the Saylor presentation.
Yep. And it's more memorable too. Like the 900 trillion number is actually it's like a better number from a marketing perspective than 1,000 trillion, than 1 quadrillion. So anyway, I think that'll be like surprisingly sticky. Yeah, even though it's now outdated.
So already 2 years, yeah. Especially with those numbers, they get outdated quickly. I heard in the when I read through it that you think about doing like a monthly or quarterly like update to that.
Yeah, I was actually thinking I plan on doing a related bit of analysis, and I need to update that chart now, mostly because gold has been ripping this year, up 43% this year, And so those numbers are probably already outdated. It's probably north of 25 trillion for gold already, which is crazy because that means that gold has increased in value by more than Bitcoin's entire value this year. Actually, in the last 3 months, let's say, gold has gone up more than Bitcoin's entire value. Which crazy. I think is just another testament to just how early it is for Bitcoin.
Why do you think this happens? I mean, this is always like those certain degree speculation of like saying like why like a move happens, but like are there any reasons for like gold ripping so much? Is like war or like anything?
Yeah, I think there's a bunch of layers to it. I think deep down, the world central banks in particular are recognizing a structural shift is underway, in the fiat era. It has to be debased. The sovereign debt will be inflated away, which is to say that soft defaults on sovereign debts globally are coming, and in light of that, you're better off not holding fiat and not holding U.S. Treasuries as the reserve currency of the world. If U.S. Treasuries will be inflated away, which I think is already happening. So in my model, I don't actually address like my expectations about monetary supply growth into the future, but I have also sort of been an adherent to the idea that the M2 growth that we've seen over the last 20 years is like 7-8%, and that I think will continue or grow into the future. And I think that that's the true inflation rate, and CPI massages that number and kind of picks its own basket of goods, and part of it is like shrinkflation of products. Substitutes that are inferior quality are put in there, and it's what CPI captures is like a middle class deteriorating quality of life inflation rate, and and that's what 3% or whatever, but true inflation is like 7-8%. And Saylor, when he took my model and built his valuation model based off of that framework, it's pretty much my approach, and then he added some assumptions and inputs and came up with a pretty similar outcome of $13 million per coin in 20 years in future dollars. The thing that I didn't have that he included was the assumption of 4x inflation over that time period, which comes out to like 7 or 8% true inflation per year for 20 years. And yeah, so I think that that's what's actually happening in the world. And I think that if you're a central bank, if you're anybody, and you realize that math, you should not be holding bonds that are yielding under 7 or 8%. And that's most bonds, especially sovereign debt. And so if you realize that, well, you're much better off holding gold, especially because the implication is that governments will have to print a lot more money. So that 7 or 8% growth rate will quite possibly increase, as they try to pay down their debt to GDPs. Given that backdrop, you're much better off holding gold. And so I think that we're seeing a bit of a shift to gold, which was overdue, frankly, because I think Peter Thiel had a great slide he put out of a few years ago, where in 1980, global equities was, I believe, total value of all equities was $1 trillion. And then total value of gold at that in 1980 was also $1 trillion. So they were at parity. And then at that point in time when Peter Thiel made this slide, I believe global equities had grown to like 100 trillion and gold had grown to 10 trillion. So no longer at parity, equities had outpaced on a relative basis by 10x. And he, the point of that slide was to say that, historically these things were in balance. And we've just kind of lived in this, 40-year bull market for TradFi assets because of declining interest rates over that period and fiat enabling, PE ratios to be bid up and all sorts of stuff. The net result of that being that, we have overvalued equities, and gold on a historical basis is now undervalued. So that was kind of the implication that he was putting out a few years ago, was that gold is, due to have a surge, basically. And I think we've started to see that. So, in my 2025 update, I highlighted which asset buckets have been growing relative to the total, and which have been shrinking relative to the total.
This one here, right?
So this is the change in nominal terms, I believe. Oh yeah, actually that's relative terms. So, Bitcoin and gold have been the big winners over the last 2 years, and bonds and money have been the big losers on a relative basis. Nominally everything's getting bigger. Right? All the buckets are getting bigger, but the overall growth rate is like 7%. And so for bonds and for money, if they're growing at less than 7%, then they're shrinking on a relative basis, and that's what we've been seeing. So there seems to be some sort of flow of value going on globally right now, away from fiat money and bonds, which are contracts for future fiat money. And on a relative basis, value is flowing into hard money assets, given the macro backdrop, being gold and especially Bitcoin.
Yeah, Bitcoin is just crazy, but it's also like a lot smaller, of course, than the other assets. So like the big percentage changes like make up for that. And the gold is also like it's crazy for me because it's like when I think about my generation, it's probably not the generation that has the purchasing power. Like nobody even thinks about buying gold. Like that's not even in a discussion point. There's stocks. There's unfortunately some crypto things in there. And then it's Bitcoin. And of course I'm super biased. Like I have a very, very small subjective thing, and you should never like make assumptions on that. But, I'm curious how like gold will actually develop, when Bitcoin becomes more and more, when Bitcoin becomes bigger and bigger and also more interesting for huge institutions, maybe even like central banks and stuff like that.
Yeah. We'll see. But I think gold surging this year is really like central banks and other savvy allocators who realize the writing's on the wall, but they haven't yet done their homework on Bitcoin. They still think that Bitcoin is, internet monopoly money or whatever. And that's only a function of time, I think, for people to realize that Bitcoin is rooted in sound fundamentals. And then once you go down that path of, once you open your mind to, wait a second, this might be solid, and then you realize it's better gold. It's gold perfected. And so, if there's any sort of like surge in interest in gold right now, it's a very good sign. And historically also a good sign of, gold tends to move a little bit sooner than Bitcoin to the upside over the last few years. I think it's just that gold, there's consensus among hard money advocates that who are savvy, that gold is the thing to buy if the fiat economic backdrop deteriorates. And most people still view Bitcoin as a risk-on asset, even though in reality it's a better gold. So yeah.
It's crazy for me if people say it's risk on, like, but I understand them. And also in traditional finance, a lot of them say risk and volatility, which for me, like, volatility is like, I have a hard time saying that volatility is risk. It is, of course, some type of risk, but it's not the risk of losing it or the risk of like it going bust, but it's just like the risk of like where's short term your like purchasing power going.
Yeah, I love that point. I agree, and I think that's probably something that Bitcoiners like inherently have processed, that risk and volatility are different, but that might be because of Bitcoin's history of it is a high vol asset where volatile days skew to the upside. So like if you go look at the histogram of distribution, the distribution of days, performance by day over Bitcoin's 15-16 year history, it's a bell curve, and then there's like a little little extra bump on the like way out on the positive side, which just means that there's a cluster of highly positive days for Bitcoin that brings up the mean average daily performance. And all that means is that volatile days tend to be good days in Bitcoin, but in TradFi assets, it's the opposite. Volatile days tend to be bad days. They tend to skew to the downside. So I think that's part of why that semantic merger has happened between when TradFi people talk about risk and volatility as interchangeable. What they really are thinking about is that volatile days are bad, so you're running a risk if you're in a volatile asset. And for us, it's the total opposite.
Volatility is skewed towards the upside more than the downside. And I think you mentioned it before with the M2 money supply. Now it's gone. Where was it? I think here it was.
Yeah.
Where you kind of see I think you looked at how much the asset growth over time was in the 2 years, this 4.8%, and you kind of say that the overall monetary, like the M2 global money supply, is about the same growth rate.
Yeah, that's right. I sort of forgot those exact numbers, but yeah, 6% on average per year for the last decade, and I think actually a little higher if you look back, if you include the Great Financial Crisis in your sample size. But yeah, this is true inflation in my view. Over the last 10 years, it's been 6%. Not the like, I don't know, CAGR of 1 or 2% that you've been told is the case based on CPI. And I think that's one of those things where your lived experience, I think, can be more informative, more instructive than what you're told is actually happening to you.
It's super interesting because a lot of whenever I talk about price, whenever we talk about like where future Bitcoin valuations might go in the future, I always get those comments of saying, "Oh, like, does this include inflation? Like, does this include like a possibility of hyperinflation?" My general answer to that is always like, yeah, if we are hyperinflating, then like the currency that is hyperinflating doesn't really matter, like in price. Like, why would we then measure the Bitcoin in this hyperinflated currencies? Like, that's why, like, even in Austria, where we have the euro, we measure Bitcoin mostly in US dollars. Like, when we talk about that, the US dollar price is like here and the euro is not hyperinflating. So imagine how it is in Turkey, or like in Argentina, where this is kind of the thing. So I don't know. It probably doesn't matter.
And that was another, I didn't mention, but that was another reason why I wanted to make that global asset landscape chart and frame my, Bitcoin's full potential valuation based off of that that starting point because any fiat currency doesn't have any meaning as a measuring stick if you look long term, because you don't know what it's going to be worth 10 years. How much is a dollar worth 10, 20, 30, 40 years from now? You don't know, because you don't know how much inflation will happen, how much money printing will happen. But what actually matters is the purchasing power of Bitcoin relative to all other assets, as a proportion of all other assets. And that's where, you need to have a starting point of like, okay, what's the current proportion of Bitcoin to all other assets? And then you can decide whether or not that proportion will grow or not. Right. And so that's where having that chart enabled, my analysis to show that right now it's 0.2% of all asset value in the world is Bitcoin. And then if you assume it, if you make assumptions about how it will grow, then you can see what percentage of global asset value it is in the future. In Saylor's analysis, where he gets to $13 million per coin in 20 years, that amounts to 7% of global asset value 20 years from now. So implied in that is that he expects a 35x relative outperformance of Bitcoin versus collectively all other assets over the next 20 years.
I think this is also this chart. I think also what you also included, right? This is where like Saylor's prediction is in 2005, and then you can also see like where Bitcoin and gold it's also interesting that in this one, gold relatively to the total goes down and arts are going up. That's interesting.
Yeah. So the one thing that, I guess to tee this up first, because I had my snapshot from 2023 where I did the first analysis, and then I did the same methodology to come up with fresh numbers for 2025, and then I was able to compare how have these numbers changed over the 2 years and get a CAGR for each bucket of how has it been growing over the last 2 years. And so that's actually that first column there is that analysis. But then the important thing is how has that grown relative to that 6%? Everything's grown on average at 6%. And so, has a particular asset bucket outpaced or underperformed? Meaning has it on a relative basis grown or shrank? And that's where that highlighted that bonds and money have actually been shrinking on a relative basis, and gold and Bitcoin have been the big gainers on a relative basis. But having that little bit of analysis allowed me to compare that to Saylor's estimates. In Saylor's model, which uses my same categories and starting numbers, he has his assumptions about how each of those buckets will grow in value over the next 20 years. So he has a CAGR for 20-year CAGR. And those growth rates are, the CAGR shown there. And then that final column is relative to his expectation of 7% annual growth of the whole pie. How do these individual buckets perform, and which are the relative gainers and losers? And so, having explained that part of the analysis, which was really cool to see, but the result of it is interesting. That Saylor expects gold and bonds to be the big losers over the next 20 years on a relative basis, and I think that's possibly the one thing that Saylor's gotten wrong. We'll see. Actually, it could end up still being right. But gold is doing really well the last 2 years. And I think, gold, I think it's more likely that gold has a role to play in portfolios, in particular for traditional conservative portfolios among like central banks and large institutions that care an awful lot about the Lindy, the long-term reliability and going concern nature of the assets they're allocating to for their risk mitigation. And so I think gold will do well in this era as this sort of fiat structure crumbles. I think gold and Bitcoin will do extremely well. Of course, I think Bitcoin will do way, way better. But I think that relative to other, to all other assets, I think gold probably has some growth ahead of it. Whereas Saylor assumes that it actually continues to shrink into obsolescence in the next 20 years. I don't think that happens in the next 20 years. I think that happens, over the next 100 years. But I think that's probably one little detail that I disagree with Saylor on.
That's interesting. Yeah, I'm also very surprised by the gold performance, especially this year. It's been way better than I would have anticipated. Like I haven't really thought about before 2025, like how gold would perform. But if I had thought about it, I would have not put it at such a high performance. So like even in hindsight, I would have definitely guessed wrong on the gold's performance in this thing.
Same.
Let's talk. Well, time is flying by, and I wanted to earlier talk already about Bitcoin Treasury companies, and also maybe with you with the smart web company and all the things. But maybe before we dive into details, how do you in general look at Bitcoin Treasury companies and their more and more important role also within Bitcoin? Like when Saylor came into the scene 5 years ago, it was just him. And then it kind of had a slow start, in my opinion. Like I expected more companies to follow quicker. And now in 2025, it seems to be this year where more and more actually like follow this lead.
Yeah, there's a lot there. I think overall, that Bitcoin Treasury companies are the next phase of maturation and growth for Bitcoin as a financial asset in the global landscape. I think Bitcoin Treasury companies amount to, a major way in which Bitcoin eats TradFi and brings TradFi assets and value into Bitcoin. So I've put out I've added to that same chart plumbing of how I view what MicroStrategy has done. I think that MicroStrategy, Saylor has re-engineered the company to be like a capital pump that has put little pipes into the bond market, the fixed income market, the equities market, and now the money market with Stretch, and these different products or these little pipes into these buckets. And as a company, Strategy is pumping value out of these buckets and pouring it into Bitcoin. And I think that will happen in every capital market in the world. There will be a strategy like Bitcoin Treasury company that does the same thing in each capital market, and they will be the primary means by which the equilibrium is reestablished in global asset distribution. So how that chart goes from its current state to 20 years from now, a future state of Bitcoin being now not 0.2% but 7% of global asset value, and it's going to come from all of these other buckets, but especially from the fixed income bucket, from the bond bucket. And I think the disproportionate amount of capital is going to flow into Bitcoin through these Bitcoin Treasury company pumps that are designed to siphon this capital out, and take it to greener pastures, basically by offering a better version of what that capital is looking for. So in the fixed income market, people are accustomed to getting 10-year U.S. Treasury bill 4.5%, when in reality true inflation is 7%. And then here comes Saylor offering 10%, and it's actually, in my view, if you understand how good of an asset Bitcoin is and how over collateralized Strategy is, in my opinion, it's lower risk than U.S. government creditworthiness. So it's an incredible value proposition to fixed income allocators who are looking for, how do I beat inflation by a few percent in a fixed income asset? And Saylor is offering the best thing out there, and nobody can compete with that because Saylor's product is powered by Bitcoin, and nobody else has that. Everybody's has these fiat debt instruments that are, powered by promises. Saylor knows that Bitcoin's going to grow at, or believes that Bitcoin's going to grow at, 29% a year CAGR over the next 20 years. So he's happy to pay 8 to 10% in order to get capital to put it into Bitcoin and have it, grow at that rate. And his shareholders benefit from the delta. So that's what's going to happen, I think, globally over the next 20 years. And Bitcoin treasury companies will be the big story in global finance that nobody sees coming right now. Over the next 20 years, it's going to be, Bitcoin eating the world of finance via these Bitcoin treasury companies and the products they bring to market in each of the capital markets in the world.
It's interesting because bonds, I feel like, are the least attractive asset bucket for me in there. It's like, if I go through that of maybe also money, but Bitcoin, gold, arts, equities, real estate, and bonds, I'm like, bonds is like literally right down at the list where I'm like, why would I park my money in there? It's like really down there. I'm like, Bitcoin, like even gold, even arts and collectibles, equities, obviously, real estate, even you could make an argument like, but then bonds, it's the first thing that I see like draining a lot of financial energy towards Bitcoin.
Yeah, exactly. I think it's the bucket that will see the greatest flows from, in sheer volume to Bitcoin. I mean, it's over $300 trillion of global value sitting in fixed income instruments, promises for future fiat. And in my opinion, they're all, it's a burning platform where, the value proposition of a bond makes sense in the 40 years that we had after 1980, where, interest rates were 15% and mortgage rates were, 18% in the US. And as a result, home prices were low because you couldn't afford a mortgage on that much, right? And then from that point in time forward, it's pretty much been a straight line down to 0% interest rates, which we hit in like the mid 2000s, and have been there for 10 years, I guess, after the 2008. But 40-year bull, that amounts to a 40-year bull market for bonds, where, as you're decreasing the interest rates, then the value of the future cash flows from holding a bond increase because you're discounting them at a smaller rate, and that jacks up the value of bonds. And we had 40 years of that happening. And the result of that is the 60-40 portfolio being the accepted wisdom for how you should allocate your money, because it worked between, for 40 years following 1980. The 60-40 portfolio was the winning approach. And structurally, mathematically, that just can't work going forward. It's not going to happen. And I think that, we have received the wisdom of the prior generation for what worked for them, even though it doesn't work, it can't work now. That's what everybody's told because it worked. And going forward, I think what'll happen is, the Bitcoiners, the hard money appreciators, whether you're, gold or Bitcoin, but especially for your Bitcoin, I think they have the right formula for the macro context going forward. And then, the winners of this generation will be the Bitcoiners. And then the accepted wisdom, 20, 30 years from now will be, well, you should, have a good allocation to Bitcoin. It's just, it takes a whole generation before accepted wisdom is updated.
But 100%, it takes some time. Money is a sticky thing, a network thing. And now I think I think this wasn't the case last time we talked. Now you're also the head of Bitcoin strategy at the Smarter Web company. How is that going?
Yeah, it's going great. Yeah, it certainly wasn't true when we talked a year ago. I joined Smarter Web 4 months ago now, and have been contributing on that front. I'm super excited about it. My thesis here is that there will be a Bitcoin Treasury company that becomes MicroStrategy like in every major capital market in the world, and I think we've seen that in the U.S. We've now seen it with Metaplanet in Japan emerging as the leader there, and Smarter Web is the leader in the UK. Still small, we're only 5 months into it. IPO'd 5 months ago and have grown from 0 Bitcoin to just over 2,500 Bitcoin in 5 months, which is significantly faster pace than Metaplanet. Also, this sort of bear market for Bitcoin treasury companies globally has tested, stress tested everybody, and has hurt share prices for everybody, but has basically stopped the flywheels for most Bitcoin treasury companies. I think basically the ones that didn't get enough of a critical mass going, didn't get enough traction, didn't have the right ingredients. And fortunately, in the UK, that is not us. We're in a great position. We have emerged from this sort of bear market over the last 10 weeks with a greater market share of UK. As if you add up all the market caps of Bitcoin treasury companies, our percentage of that has increased. We're in a better position of relative strength than we were before this. And looking ahead, we have the same instruments in place that Metaplanet relied on to grow, namely, an ATM style instrument where you're able to sell directly into the liquidity, the volume traded on up days. Fortunately, we're one of the more liquid stocks in the UK, and and we also have the third largest Bitcoin Twitter community. So it's Strategy, Metaplanet, and us. I think that kind of is an indicator that a lot of savvy Bitcoin investors are excited about the setup that they see for Smarter Web to hopefully repeat the Metaplanet journey that we've seen over the last year and a half. And now we're 5 months into our journey and appear to be on that same trajectory, though currently 1/10 the amount of Bitcoin that Metaplanet has. So, and for that matter, Metaplanet had this amount of Bitcoin about 9 months ago. So it kind of shows you how quickly this model can work and can snowball. And we're excited about continuing to do that. And hopefully we keep following that trajectory in the UK.
That's super interesting. How much of a role actually does like retail investors and also as a pure up like Twitter communities like that and like the individual level actually play a role in a Bitcoin treasury company?
Yeah, I think the reality is that as with Bitcoin, the first people to understand this model are savvy individuals. And with Bitcoin, that has meant Bitcoin Twitter and the information flows available on Bitcoin Twitter. And if you're, a savvy person who's willing to do their homework and really think things through, and you can, collect all that information on Bitcoin Twitter and have a greater conviction in Bitcoin as a result of it. Same is true here with Bitcoin treasury companies. It's not surprising. You need to first understand Bitcoin, and then you need to understand the sort of financial engineering levers that are available for Bitcoin treasury companies to arbitrage fiat into value delivery in Bitcoin terms for shareholders. And that's pretty abstract, but the mechanics are very real and math driven. So it requires people doing their homework And the first people to do that are the like terminally online Bitcoiners who already understand Bitcoin and are capable of doing their own homework and coming to their own conclusions. That's who Bitcoin Treasury Company investors have been to date, largely. And we're seeing institutions slowly waking up to the model. And I think that trend will continue. But I think the reality is like institutions lag behind the sort of super Twitter savvy Bitcoin investors who are at the cutting edge of information flows.
That's super interesting. I like. It's almost like the Bitcoin Treasury companies. It's so fun. I in my notes I had a shortcut for Bitcoin Treasury companies, and then I wanted to figure out like, oh, what is the right what did I want to say here? Because Bitcoin Treasury companies is literally BTC. I just realized that in that second.
Yeah, there's like I still write BTC TC, Bitcoin Treasury Company, but yeah, the crypto people have started calling these things DATs, digital asset treasuries, and I really dislike that because it's crypto people inserting themselves into something that is. It only makes sense to do this if you're accumulating the best asset in the world, which is Bitcoin. And so all of these other crypto things, in my opinion, will end up in tears. And I don't want to I don't want Bitcoiners to adopt this this term that's been foisted on us as an inclusive term to include altcoins. But we need to come up with some sort of monosyllabic, easy to say and easy to understand alternative term, because DAT is very punchy, So I don't know what sort of terminology we will end up landing on, but I think Bitcoin Treasury Company is a bit of a mouthful. So hopefully it's something better than that.
Yeah, and BTC is kind of confusing.
Yeah, you can't do BTC.
Before we come to the end routine, I have one more question, because we have 2026 coming along, and there's this, if we follow this trajectory of like 4-year cycle, 3 years up, 1 year down, which Bitcoin has followed so far, is there any concern or like a threat towards like Bitcoin Treasury companies, where you see if we go down too long or something like that, where you're like, this could be a threat to Bitcoin Treasury companies that might be over leveraged, that like might play too much with the fire? I mean, now there's like a lot of them. It's not just like the top 3 ones with like SmartDevApp, with Metaplanet and Saylor with the strategy, but there's like so many like more that I kind of feel like if we have a lot, maybe then the smaller ones like try to like outcompete just with like going overboard and then kind of getting swapped away if there is like a drawdown.
Yeah, I think all of that will happen. I think you're right that if you're a smaller or like a late entrant Bitcoin Treasury Company, you might be incentivized. You might be tempted to take on more leverage, and some will do that. And if you get depending on the bear market drawdown, if you're 30, 40, 50% leveraged, that can be fatal, right? And so you need to be quite conservative. 10, maybe 20% could be quite fine, and it could help fuel your returns. I do think that by and large, Bitcoin Treasury companies are actually not that leveraged. People think of them as like leveraged Bitcoin, and it's true to a limited extent. And so I think that's a bit of a misconception that people have about them, especially when you consider like in TradFi, companies are extremely leveraged. And so if a Bitcoin Treasury company has 10% debt, that's quite low, really. Yeah, and bear market to come, we'll see. First of all, it has been quite a different shape to this bull market, and we've had these plus 50% pops and then sideways for 3 to 9 months, and then the next leg up, and we've been doing that for 2.5 years. That's different than any prior cycle because we haven't had those prolonged periods of sideways digesting the leg up that came before it. And what that could do is that could extend the time and length of this the bull market, and that could mean that we go right into 2026, possibly all the way through, with the same sort of pattern. The counterpoint would be like if things pick up really fast here in Q4, that maybe we have a blow off top at 150 or 180 or something. But if we have a continuation of the same structure we've had, maybe we go to 200 or even higher by the end of 2026. We'll see. And then for Bitcoin treasury companies, I think there's going to be all sorts of tests, that filter out weak players. That's just how a new market has to work, right? This is a new industry. And I think the biggest test has been what's happened over the last 3 months. MNAVs have compressed down to, from like 5 on average to, or even higher to like 1 on average. And has put a lot of pressure on valuations and has made it very hard for most Bitcoin treasury companies to raise any capital. And so a lot of them haven't raised capital for months, and that's kind of broken the trust between the companies and their shareholders, and kind of stopped the narrative flywheel for a lot of those companies. So I think the biggest bear market test has already just happened, and I think the companies that emerge from this, with relative strength, put themselves in a great position to benefit from the next pendulum swing back to the positive. That I think is just what happens in this space. Metaplanet has had kind of 4 cycles of MNAV expansion and contraction over its 1.5-year existence, which is the same as Bitcoin having 4-year cycles. It's just compressed by like 12x in terms of timescales. So I think that's just the nature of a brand new industry like this, and how quickly these things are increasing their Bitcoin treasuries causes the volatility to be much higher, and that has to happen much quicker. That's how volatility manifests. It's not exactly amplitude of volatility, but instead it's how much time that same cycle is compressed into that gives you higher volatility.
That's super interesting. It's almost like a whole new like a whole new department within Bitcoin that kind of engages.
That's what I think Bitcoiners are missing. Is like I think this is going to become like, it is not just like a little fad. I think this is the next mega trend for Bitcoin's maturation and will be the big story in global finance for the next 20 years. So it's much bigger than I think most Bitcoiners are currently thinking.
I have one question that I asked each and every one of my returning guests, and you have been now on the second time. And the question is, what have you learned outside of Bitcoin since your last appearance?
Well, I guess that's easy. From like an intellectual point of view, I guess it's slightly cheating because this was sort of a Bitcoin related article, but for years I've been meaning to do a bunch of research to continue the ideas from Shelling Out, which Nick Szabo wrote in 2002, and I think is extremely instructive for understanding what makes good money, and really sets the stage for Bitcoin. And it kind of plays off of or dovetails with Saifedean's sort of history of money over kind of documented history, and Szabo kind of goes further back in time into sort of paleoanthropology of money, and the origins of money as shell money, and that always struck me as like, extremely illuminating. And I wanted to update that, because 20 years have passed, and I wanted to see what else was out there in terms of, findings in paleoanthropology. And I found a bunch of great stuff, and I, realized that there was a new hypothesis that was forming for me, that I put together into a research piece about how Homo sapiens outcompeted other early humans, and why, and the neuroscience basis. That my background is in neuroscience as my undergrad degree. The neuroscience, basically, there was a discovery just a couple of years ago of a genetic mutation that amounts to accelerating, or kicking into overdrive neurogenesis in specific regions of the brain that are associated with abstract thought, versus a mutation versus prior, early human groups like Neanderthals. And I think that was the basis of our capacity for appreciating collectible money, like shell money, and simultaneously the basis for why we see an explosion of art and symbolic behavior in Homo sapiens that it's largely lacking, but not completely absent from Neanderthal behavior. So anyway, people can go read that if they're interested in that topic. OnceinaSpecies.com is where that lives. That was kind of like 6 months of digging into all of and reading all of Szabo's citations. Go find those source pieces and read those and go from there, and then layer in what I found over the last 20 years of findings, and how that helps create a hypothesis for why Homo sapiens are here, and it's rooted in money as an evolutionary advantage, and that's rooted in a neuroscience mutation, and if all of that is true, it means that appreciating scarce assets is the foundational differentiator and advantage that Homo sapiens had over other early humans. And if that's true, then Bitcoin is the ultimate fulfillment of what we've been searching for the entirety of our species.
I love that, man. This is, I think, an amazing way to end it. But we have, unfortunately, one more question, the end routine of the podcast. I always search for the best ending point to Bitcoin, to the podcast, but I've always an end routine where the previous guest is asking a question for the next guest without knowing who the next guest actually is, and she asked you, what internal shifts have you noticed as a result of your Bitcoin journey?
Oh my gosh, so many. It has completely reshaped my worldview and my values, and I encapsulated that into the piece I put out in 2020, why the yuppie elite dismissed Bitcoin. It was all about my journey to Bitcoin, and and why it seems so hard for people who come from a background like me, sort of yuppie elites, MBAs and the like, why it's so hard to see the value of Bitcoin. And the key thing is that people in that position trust the system, and to get to the true value of Bitcoin, I had to lose faith in the system.
That's crazy. Yeah, it's like it breaks things, and then you like, this is why I think also like Bitcoin go down different rabbit holes, because once you break one thing that you believed in, like inflation is good or something like that, like it's easier to break other things also as well. But yeah, thank you so much, Jesse. You have been so gracious with the time, and thank you so much for being on the podcast. Before I let you go, where's the best way to find you? I guess Twitter, the account that we also like showed multiple times already in the pod.
Yeah, at Croesus _BTC And yeah, go check out the smarterwebcompany.co.uk and check out our analytics dashboard to see, the progress and track record that we have built as a Bitcoin treasury company, whose goal is to add Bitcoin per share for the benefit of shareholders over time. And we've done a lot of that, and hopefully we continue to deliver a lot more of that Bitcoin yield into the future.
Awesome. Thank you so much, Jesse, for being on. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.